We are officially off to the races, trading open here at the New York Stock Exchange. Stocks opening higher in today's session on Friday, and OFG, as you see there, celebrating the opening bell. Its CEO is going to join my colleague Trinity Chavez down there on the floor in just a few moments. But of course, as equity markets are now open for trade, I do want to bring in Mitch Roschelle, founding partner at Macro Trend Advisors, to talk more about what we are seeing here in the market. Mitch, good morning.
Good morning, Kristen.
It's good to see you. So we've seen stocks take a pause this week. Could end on a positive note if these fractional gains hold until the close today. What is behind this breather that we've seen the past few days in the markets?
I think anxiety, it's a multi-factor anxiety. First, we saw bonds sell off and yields go up. Many of the big tech names are interest rate sensitive in terms of the market perceiving that they're interest rate sensitive. I don't see the bond yield rise as being troubling. I actually think it's quite healthy, but I think equity traders thought that it was troubling. But, you know, we have an election, which isn't a newsflash to anyone, coming up. And I think that there's a lot of anxiety going into that, not knowing what the rest of the year is going to be like, not knowing what the next 4 years could be like. And it just has investors taking a pause. You know, earnings season isn't so bad. So it, you know, doesn't really sync with the earnings coming out strong. So I think we'll see.
Well, we've seen, Mitch, yields rise despite the Fed's previous forecast of cutting rates ahead. Because of this and the incoming data and earnings that we've seen so far, do you think the Fed is going to need to temper its rate cutting path?
Well, I think it's going to end up being the jobs report that comes out a week from today that's going to inform the Fed in terms of how they should proceed in their November meeting, you know, which is after Election Day, which is where they would announce the next cut if there is one. You know, what's interesting is, you know, with yields rising, we have the 30-year Treasury, you know, 4.40, 4.5, you know, sort of, you know, somewhere between 4.25 and 4.5. And we have the short end of the curve, the very shortest end of the curve, at the same yield. So we still have that sort of inversion, but the rest of the Treasury curve is steepening, which signals that the bond market and bond investors think that the economy is improving. So we'll see if the Fed has the same view. But I think that the employment picture is probably the thing that the Fed's going to be focused on the most.
Do you anticipate that this jobs report that you just referenced, Mitch, could be an outlier, though, and skewed because we've seen strikes and we've seen extreme weather between the hurricanes in the month of October?
I think it becomes more of a political weapon for the candidates than it is something that the Fed is going to, you know, change its mind on. I wouldn't be surprised if we didn't see it, you know, as a 5-digit number. Well, you're right. You have the Boeing strike. You have, you know, the short-lived longshoreman strike. We had, you know, 2 natural disasters which displaced workers. And then you have this this pattern of revisions that we're in. So we could see a very disappointing number, which obviously is going to be fodder for the Trump campaign, you know, in the final days. But the Fed's going to look at it more deeply. But if the Fed sees something troubling ahead in the labor markets, because what I'm hearing and seeing in the labor markets is that companies are equally anxious about the future and the ability to continue earnings at the trajectory that they've been at. And they're beginning to control costs, especially in white collar jobs. So if we look at the labor picture very, very closely and see that the only thing that's creating jobs is healthcare and government, and, you know, white collar jobs and high wage hourly jobs aren't continuing to grow, that could give the Fed a little bit of pause. But I don't think they're going to, you know, depart at this point from their plan to cut rates.
And of course, we'll see how the consumer is feeling with that consumer sentiment data out at 10 a.m. Eastern this morning. Mitch Roschelle, founding partner at Macro Trend Advisors. Mitch, thank you so much.